Good evening. Ira Epstein, and here we are, Tuesday, September 20th, 2022, just getting on at 6:30 p.m. Central Time, and wow, what a day. What an evening. We're still down in the markets. You were down today hard in the stock indices, and they cut those losses in half in the last hour of trading. Still down pretty good, but cutting the losses in half. Now, I went back and I did a research and asking, what has happened in the past, I think, 4 rate hikes that we've recently had? Each time that we've had one, the market has rallied, not broken, rallied after it. I have no reason to think that won't happen after a prolonged break like this. I am not saying that's a bottom in the market. I'm saying that I am looking for a rally condition in the market to now step in. Could be nasty given the size of the break that you've recently had, so beware of it. If you're aware of it, and you see these things ahead of time, it helps you. Why does it help? Because you're looking at a market and you're on the defensive right away. And that's where I think you should be. Bonds and notes down pretty hard. At one point today, you got up to 398 in the 2-year. Now, there's going to be a thing called the fours. I think you have to have the short-term rates over 4%. I think that you're going to be looking at core inflation, as I said, that 4.3%. And those are the things the market's going to look at. We have to get the Fed to be ahead of these numbers, and then we can start seeing where do we see inflation sputtering. How's that for the new word? Sputtering. Haven't seen it yet. We've seen the rate of increase slip back. On the headline number, it's certainly a slip back from the June number, but that's what you're dealing with. And tomorrow's all about one thing. You know that the Fed chair is going to come out as a huge hawk. The question is, does the Fed go with 75 basis points, which most of us think is going to happen? I think that's what most analysts are in the camp of. Or does it surprise and go to the 100? The 100 could take the market off stride. That's what you have to be careful of. When we look at how the weekly area chart of closes is going for the week, you're about unchanged. It's hard to believe, isn't it? But that's where you're at. When you take a look at the action, you can see how the market came down and where you're at this point in time. The trend is down. You have an outside day today. If you take out the high of an outside day down in the next 2 trading sessions, which would be Wednesday or Thursday, often my work shows that you make a rally attempt at the closest major moving average. In this case, that would be 39.76 back up to the 18-day average of closes. Had the market, did it make new lows since the bearish crossover? Yeah, you made a lower and low today. Didn't have a lot of traction. It shouldn't. Why? Because you've already going to the Bollinger Band. You're right on top of it. Are we embedded? Embedded means that both numbers are sitting under 20 for several days in a row. And the answer is, on the close of business Tuesday, both were under 20, but not Monday. You can't even embed tomorrow. No, I think that you're oversold enough that it'll be very hard to add materially to the downside. Am I bullish? No. I'm giving reasons that I'm concerned about being bearish. That's what I'm looking at. When we come to the mini NASDAQ, it's the same party. You can't count today's numbers under 20, so you got to go back to Tuesdays. Even though I'm recording today, when I say today, you understand we're already in Wednesday's session. Both numbers under 20, both under 20 the day before, not the day before, as you'll see. So tomorrow, the NASDAQ could theoretically embed. I'll be looking at that because that puts me in the driver's seat for Thursday action. What about the Dow? Can the same thing happen? You can't count today. So we go back to Tuesday's action, both under 20, both under 20 the day before and the day before. You're already embedded. If this market loses the embedded reading with the red line at 21, then I'm looking for the 18-day average. I'm getting reason upon reason to be cautious if the market does the rally like it's done on the other rate hikes and it reverses itself intraday and gets a rally there. You could even get back up to the resistance of the 18 and the 100 sitting here in the Russell. When I take a look at the VIX, it'll pop up here in 1 second now. The market refuses to go into what I call the capitulation mode, which I think would take it over the 35 level into the 40 zone. So I can see where this market just steps back and makes some noise trading, but I don't think it's going anywhere big. You've been embedded a very long time in the bonds and notes. If anything, I wouldn't be surprised you get a little short covering. I'm not saying it's going to lose the embedded reading. A big rally and you keep the embedded reading brings me out, and I'll be telling traders to go short. But do you think I would stand in front of this report? I didn't do it on the CPI. I don't think this report has anywhere near the impact, I want to go on record saying that, of the CPI report. That's the important thing. Could I be surprised and you get the 100-point basis, 100-point full swing out of the Fed? Well, that probably has to change the picture. But would I have my clients in to be worried about it? Zero chance that's going to happen. I will be on record saying, we've sat this long, let's see what happens, and we'll take it from there. If you're going to be in the currencies, if you're going to be in the interest rate futures, the metals, or the stock indices. The outside markets, nah. I'm comfortable in those markets. In the dollar index, yeah, I can make an argument you get to the upper Bollinger Band, the 110.24 level, and from that area I look for some resistance to show. You've just been going sideways on the euro. I think you'd agree it hasn't gone anywhere one way or the other. The British pound, well, it's trying to get something going, but it has a higher high, lower low, and you have the Bank of England setting its rate policy this week. What about embedding? You're not in it. I'll wait for something to happen there. In Bitcoin, as goes the stock market, so goes Bitcoin typically. You're oversold. You've already come down to the lower band. You have the swing line up, the bias down. The market is waiting to see this report and the reaction to it. Now in crude, you can see the differential. You've been climbing on the differential, putting Brent is a little bit better of a bid than Chicago. WTI is what we'll call it, but it is Chicago. We trade it, that way here. We call it that. It's a New York market, but lower low, higher high, lot of resistance, 93.35 to 93.73. Today, the press picked up what I was telling my traders before people even caught it. I was reading a source yesterday, and all of a sudden I'm reading it, and it says, OPEC is missing its production quotas by 3.5 million barrels a day, and they sit here and they're cutting production by 100,000. I started laughing, and I was saying to you, it's PR. The problem is the market is petrified about demand for the oil because of what's going on with all these interest rate hikes all over the world. You saw today Sweden, their Riksbank, they went up 100 basis points. They haven't done a rate hike like that in 3 decades. What did they say in their message? Inflation. They have to fight inflation. We're all doing this right now. That is what you're dealing with. So if you want to be a hero tomorrow, that's up to you. I'm a coward. So I'll be standing away from this. You have a higher high and lower low. There's not much I can do in those markets. Gasoline, I am looking for this market to try to find its bottom against that 18-day average of closes. The battle is on for it to do it. It certainly is pulled away from 223. Now, we do something called price counts at the Linn Group. And price counts, think of them as Fibonacci on steroids with swing lines. That's the best way I can explain it. It's a proprietary tool. It's rare you get to a 4th price count, rare. If this market starts breaking down, the 180 level is that 4th price count. I was looking at it today as the firm put it out, and I went, wow, if it falls apart, that could be it. Got to keep your eye on it. I'm not saying it's going there. Natural gas, I am looking for this market to get a bid shortly. The combination of colder weather eventually going to move in. We're not there yet. In Chicago, outside, but we have a town called Morris, known for dairy animals, believe it or not. No, it's about an hour and a half away or whatever. I go shooting with my guns out that direction. 95 today. The city in Chicago was 80. We'll be in the 70s. We're at that point where we start getting cooler and cooler. But my point is you're really not using a lot of natural gas at this point. That's the Midwest. You know what it's out east, same problem. But are we 30 days away from turning on our heaters instead of our air conditioners? We will be in the Chicago area. October can get some cold nights, so I'll be watching that. And in that Freeport area of Texas, that terminal that had that explosion back a couple of months ago, October, November is when they're expecting they're going to be able to start shipping again. Less supply, possibly, colder weather. That's the things I look for. Are we there on this chart? No, but it is certainly worth one of those things where you keep your eye on it and you try to figure out what to do with it. These are the things I talk about each morning when I put out my morning updates. Now, in my morning updates, I cover 40 charts, but how I start you off is I tell you what's happened overseas from Asia to Europe, CPI numbers, what's come out, the market likes this, doesn't. Then I bring you up to date with what are the day's reports in the U.S. going to be showing. And at times I'll say, hey, we got earnings going on this, we have something going in that area. We cover it in all the futures. The beauty of the combo package, we offer a special price for both the futures and the SPDR ETF together, is at 5:30, I'm recording the futures, and you know that if you're trading SPY, DIA, I can go on and on, as you know, TLT, USO, you're really trading what the futures are doing. And then you get the reports out of the way, and we start going. As an example, I've had more positions this week in my SPDR ETF video than in my futures. Futures, we haven't done anything. Where the shorts have been initiated is in the other area. So you put it all together, you cover these markets, give you a game plan, and try to make some heads and tails sense out of it. The idea there is I'm not managing your money. I'm telling you what I'm seeing in the live charts as they're coming out right then and there. Here's why, here's what to do. The cost, folks, you are spending more on your Starbucks coffee daily than this cost. For the month, it's like $16 to get yourself going. It's no real money involved. You're going to get 48 videos between the two of them. 24 in the futures, 24 in the SPDR ETF. Weekly charts coming out on the weekend with long-term trades. Do this. Here's your longer plays. And then the short-term swing trades, not day trades, the swings in the market. And that's what you're after in these type of vehicles. So you put it together, come up with ideas for you. If you go to our website, it's under research. I'm telling you, and by the way, you can take even just the SPDR or the futures one and cut that price in half. But get yourself one of these. The smartest thing to do, in my opinion. You can also take your cursor, move it right up like you see I'm pointing up there. An icon will appear. Give it a click. It'll take you right into the area you have to be. I'm Ira Epstein. Thanks for watching. It's going to be wild tomorrow. I can't wait to get this behind us and get regular trading underway. You take care.